So hello guys, welcome to another episode of Finfluenced, where we talk about how we got finfluenced by the Finfluencers. And today the Finfluencer is AI, and we are going to talk about a very famous, very loved company called Varun Beverages, and we are going to do a deep dive, deep research analysis using Google Gemini Deep Research. So stay tuned and let's get started. Before I start, please make sure to hit the like button and also know that this is not financial advice. And with that being cleared, let's go ahead. So what I've done is I've created a report and an infographic by using Google Gemini Deep Research, and I have hosted this extensive, comprehensive, deep dive, deep research, deep report. How many times have I said deep? on my website, and I will link it down below in the description. But it is really comprehensive study. But what I've done is, out of the same report, I have asked Gemini to create a infographic for me. And this is how the infographic looks like. So even I have not gone through this right now. So let's get started and let's go through this together, okay? So Varun Beverages Limited, powering PepsiCo's global growth, a forensic analysis of Varun Beverages, PepsiCo's second largest global franchise. This infographic visualizes VBL's aggressive growth, financial health, strategic expansion, and its standing in a competitive market, providing a clear view of its investment potential. Okay. So revenue growth 24.7%, PAT growth 26.2%, distribution in about 400 million plus retail outlets, and very positive debt to equity ratio, which is after the QIP deleveraging. Okay. Financial ascent. VBL has demonstrated a powerful growth trajectory with a consistent double-digit increases in both revenue and profit. This chart highlights the company's impressive financial performance over the last 5 calendar years, showcasing its scaling ability. Okay. So while in 2020, its revenue was 87,000 crores, in 2024, its revenue was 2,000 crores. So it has more than doubled its revenue figures, and its PAT has also risen proportionally, or rather even faster, I would argue. And if you look at the profitability and efficiency, the ROE and ROC have been robust in signaling efficient capital use. In 2024, dip in ROE is a mechanical effect of a larger equity base post QIP, not an operational decline. So in 2024, they did a QIP, which is why their equity has been diluted a bit. That is why the metrics look like they've gone down, but as it says, that it's not due to operations. Okay. Evolving product portfolio. While carbonated soft drinks remain dominant, VBL is strategically shifting its mix. The share of high margin products like Sting is growing, and there's a significant push towards low or no sugar products, aligning with global health trends. So even today, or even up until FY24, CSDs, which was carbonated soft drinks, was still 74% of BBL's production, while NCBs, that is non-carbonated beverages, is 6.2%, while others, or this just packaged water, so that's 20%, 19%, right? That's their sales volume mix. While if we look at the cash flows, we will generate strong cash flows from operations. However, aggressive capital expenditure shown as investing outflow historically resulted in negative free cash flow. I'm really tired, it's late today. Negative free cash flow, a trend mitigated by the recent QIP, which strengthened the financing cash flow. Okay. All right. So the financing cash flow has seen significant growth, and also the operating cash flow. But the cash flow from investing activity, which, as they say, is aggressive capital expenditure, that's not bad. That's not entirely bad, but I'd say that if a company is aggressively doing capex, then they should not really have a lot of free cash flow lying around. Otherwise, they are just controlling their capex. But then a company like this big, Varun Beverages, the second largest bottler of PepsiCo, should really have some free cash flow lying around. So let's see. Aggressive expansion blueprint. VBL's growth is fueled by relentless expansion. This includes commissioning new state-of-the-art facilities across India and strategic acquisitions to deepen its footprint in the high-potential African market. So in 2023, they did a greenfield push where they commissioned new plants in Rajasthan and Madhya Pradesh, boosting some capacity, some domestic capacity. While in 2024, they did an African acquisition of the beverage company, or BevCo, in South Africa, which probably helped them diversify their portfolio a bit into international markets. In 2025 so far, in Q1, they have continued the expansion while commissioning new facilities in Himachal Pradesh and Uttar Pradesh. And they've entered agreements for Tanzania and Ghana. Okay, nice. While the future is snacks and sustainability, which is distribution of PepsiCo snacks in Africa begins. RPET joint venture to launch in Q3 2025, aiming for 100% recycling. That's impressive. That's good. All right. So let's look at the green flags and red flags. Competitive landscape. The beverage market is heating up. VBL faces intensified competition from Reliance's aggressive entry with Coca-Cola at low-priced spinner, alongside the potential IPO of Coca-Cola's bottler HCCB. Okay, I did not know that. So that's interesting. So Reliance came out with their Coca-Cola having a very aggressive pricing, and that's basically the Ambani magic, right? And that basically posed a big threat to not just the market share, but also the sales metrics of Varun Beverages. Especially in a market like India, which is price sensitive, we would any day buy a 10 rupee bottle over a 12 rupee bottle. So that's how it is, unfortunately. And Coca-Cola's bottler is going to come and do an IPO in India. That's crazy, right? So potential IPO for its bottling partner could fuel more aggressive competition, potentially leading to margin pressure for VBL as the duopoly dynamics shift. What are the growth triggers and outlook? Despite competition, VBL has clear growth catalysts. The key question for investors is whether these are already priced into the stock's premium valuation. While India is an underpenetrated market for sure, low per capita consumption offers huge headroom for growth. There's an operating leverage as well. New high-capacity plants are set to improve profitability as volumes scale. And there's international product diversification, where they are expanding into African economies by doing acquisitions. So that's also there. What's the final verdict? Is it investable? Okay, it is investable, but it's overvalued. Varun Beverages is a fundamentally robust company with exceptional growth, a strong balance sheet, and a clear strategic vision. Management's execution has been flawless. However, its premium valuation of a PE of 56, let's go and cross-check. PE is 56, perfect. Suggests the market has already priced in much of its future success. The recommendation is to hold and accumulate on dips. Not my recommendation. This is just the language the AI is using. It is not a recommendation. It is not a buy or sell call. This is just for education purposes, right? While the management integrity score is 8.5, which is they're highly transparent and consistent in the delivery of their promises. Very good report. Good synopsis. Let's go and check screener and quickly check some price action. So in the last 3 years, it had shown some momentum, but then it broke down quite badly actually. I remember investing in Varun Beverages in some time, but I got out because one of my stop losses got hit there. I wanted to stay in Varun Beverages for a very, very long period of time, 10, 15, 20 years. But then the markets did not remain favorable at the time. So yeah, it is what it is. I don't hold Varun Beverages anymore. Alright, so if we see everything is green, green means that things are growing heavier, or rather brighter green means growing at a much more faster pace. And you see, we can see the top line growing, we can see the bottom line growing, we can see the EPS growing. There's just nothing bad about this company, right? The only thing is that 5-year CAGR is 50%, pretty amazing. 3-year CAGR is 43%, pretty amazing. 43% growth, 50% growth every year for 5 years. That's phenomenal growth. But in the last 1 year, it has gone down 30%. And that's a consequence of its growth, I would say. It's not the duty of the stock price to just go up and up, right? You have to be rational for a while, right? And we've seen the biggest of giants consolidate for years and then giving a breakout after so long. You can name them. You can say HDFCBANK, you can say BAJAJHLDNG, you can say Reliance. Reliance is again consolidating right now. And I think Varun Beverages is also now in that stage where the growth has subsided. See, phenomenal growth that it has shown us, right? But now, just after 1st of January, exactly on the New Year's Day, when Trump tariffs were announced and, then the war happened and everything happened, global trades and consumption stories and all of the stocks that were aligned with that, they all suffered. Compared, also additionally, Varun Beverages as a stock just needed a trigger to fall because the news was already bad in the market because of the growing competition from Reliance and Coca-Cola. But people still had faith, and that's why they probably started buying on dips as well. But then, just as some negative black swan event happened, they started selling it, and yeah, this is the story. And I believe Varun Beverages would trade in somewhat this channel till for about a couple of, I would say, a couple of months to a year or two, actually, right? Because as the report says, its growth has already been priced in, because even after this fall, this is a huge fall, right? How much fall is this? From the top, this has fallen 32%. So even after the 32% fall, it is trading at a 56 PE ratio. So while let's look at other ratios, ROC and ROE have been reduced because of your QIBs. PEG ratio, yeah, this is what I was looking for. So PEG ratio is 1.35. So even in terms of its growth, it's like 35% overvalued if you look at the price. It's a very good company I would really want to dip my toes into. But then it's interesting to see how a giant like this can be just disrupted by a couple of companies taking crazy steps, or just simply sentiment being quite volatile around this kind of industry, right? So I've supplied this report in the description below, and I've supplied this report in the description below as well. Please hit the like button and please hit the subscribe button if you want to see more of such content. And let me know in the comments if there's something else that you would like me to cover. And I will see you next week. Till then, bye.
कभी मेरे ख्वाब सा, कभी उलझे जवाब सा, के चंदा में भी दाद सा, मेरे जैसा